So 2019 was an unusual year because we had a combination of weakening macroeconomics, a lot of uncertainty from a geopolitical perspective, and yet very strong performance of markets. This was also obviously driven by the U-turn in the monetary policy from the Fed, but also a lot of central banks have become very accommodative. And then in Q4, we had a lot of reduction in geopolitical risk, which obviously had a significant impact in sentiment and pushed markets higher. We are in a situation of global savings glut, which combined with very low rates or negative rates, has pushed off-course investors to reach for yield returns and push valuations up. I think clearly in the end of this year, we have a number of risks receding, particularly on the US-China trade tensions, and Brexit. I think one of the key risks that will remain next year is the US election, and beginning with the nomination of the Democrat candidate, which is an uncertainty for the moment, and then the election itself. I think we will have a situation where, from a macro perspective, quite a bit stability, maybe a bit of a rebound. Monetary policy is going to be, say, very, very flat, very unchanged. And I think this environment will be positive for markets. Maybe another risk is that we have a lot of commonality in positioning, a lot of consensus-driven positioning, and if there's any change to the environment, it could generate a lot of volatility in the market. I think the opportunities are, first of all, obviously, with these receding risks at the end of the year, we can have, good returns for risk assets. I think the growth environment remains relatively benign, not very fast growth, but reasonable growth. As I say, monetary policy very benign. I think maybe we could have a bit of a surprise in the market, positive surprise, if effectively the governments start to implementing fiscal policies. We saw the example of Japan, very clear. It is highly likely we'll have that in the UK too. And if other areas, and particularly in Europe, in Central Europe and core Europe, we have some sort of fiscal stimulus, that could drive a leg of growth for markets. Of course, this is very positive for UK assets. It relieves of a lot of uncertainty in the short term. Clearly, Brexit would most likely happen now. But then we enter in a phase of uncertainty also, because obviously the trade deal with Europe is something that will take some time to be negotiated. The details, we don't know exactly what they will be. So a little bit of uncertainty, but overall, clearly a positive outcome for the UK assets that will clearly under-owned by international investors. Business investment also being quite slowed down because of this issue. So all that will be certainly quite positive for UK growth next year.